Welcome back to English with Bruce, and welcome to our brand new 2026 style. This year, we're going sharper, smarter, and much more global. Today, you're going to learn 6 powerful sentence patterns that professional investors use when asking about the real estate market. If you can ask these questions clearly and confidently in English, you'll instantly sound like a global investor and not a beginner. Before we start, hit like, subscribe, and turn on notifications so you never miss your weekly English upgrade. Let's begin. 1. Asking about market direction. Pattern. How is the market trending in terms of prices, rents, sales, leasing now? Use the pattern like this. How is the Honolulu condo market trending in terms of rents now? How is the commercial office market trending in terms of leasing activity now? Why it works. It sounds analytical and neutral, perfect for investor conversations. 2. Asking about supply and demand pressure. Pattern. What's driving increase, decrease in demand, supply for property type? Use the pattern like this. What's driving the increase in demand for single-family homes on Oahu? What's driving the decrease in supply for affordable rentals this quarter? 3. Cap rate. What is a cap rate? A cap rate is a quick way to measure a property's return based on its net operating income. You calculate like this. Cap rate equals net income divided by purchase price. Low cap rate equals expensive market, usually safer. High cap rate equals cheaper market, usually higher risk. Pattern. What cap rate are investors expecting for property type in location? Use the pattern like this. What cap rate are investors expecting for Class A apartments in Honolulu? What cap rate are investors expecting for small retail centers on the Big Island? 4. Cash on cash. What is cash on cash? Cash on cash return shows how much cash you earn each year compared to how much cash you put in. Most people calculate it before taxes because taxes vary by investor. You calculate like this. Cash on cash equals annual cash flow divided by cash invested. If you invest $200,000 into a property and it generates $16,000 in cash flow per year, your cash on cash return is $16,000 divided by $200,000 or 8%. Pattern. What cash on cash return should I or investors expect if I put in amount as equity for deal type? Use the pattern like this. What cash on cash return should I expect if I put in $300,000 as equity for a Maui condo? What cash on cash return should investors expect if they put in $800,000 as equity for a small multifamily deal? 5. Asking about risk factors. Pattern. What are the most significant risks I should keep in mind or consider for investment type, time period? Use the pattern like this. What are the most significant risks I should keep in mind for short-term rentals this year? What are the most significant risks I should consider for office conversions in 2026? Why it works. This question sounds professional, thoughtful, and strategic. 6. Asking about timing. Pattern. Is this a good time to buy, sell, refinance property type given what's happening with rates, market expectations? Use the pattern like this. Is this a good time to buy a Honolulu condo given what's happening with interest rates? Is this a good time to sell a rental property given what's happening with current demand trends? If today's lesson helped you speak more like a real global investor, hit like, subscribe, and turn on notifications so you never miss a Wednesday power lesson. Next week, we're moving into something even more advanced. You don't want to miss it. This is English with Bruce, helping you speak global, think global, and invest global. See you this Sunday.